The overnight action report here at marketStream.live. My name is Joseph Cusick with the Cusick Group. Securities offered by MoneyBlock. Let's take a look at how the week in Asia wrapped up overnight. Taking a look at the Nikkei. The Nikkei did finish the session last night down about 0.5%. And that loss basically pulled back what was a pretty significant, decent gain this week. It did consolidate for the last couple of sessions up here off of its best levels that we've seen in 2017, but did finish the week up about 0.3%. One of the major catalysts for the pullback last night was the fact that there is fear that the infrastructure play here in the United States, it's going to take a lot longer than what was anticipated. You started to see names like Kobe Steel, Pacific Steel, down anywhere between 2.9% and 5.4%. You also saw that growth names started to get a little bit sluggish, and that was because we saw with this orange line representing the yen. We talk about the currency, and the yen currency actually popped overnight and has continued to show some strength against the greenback. That put growth names also under some pressure. That yen strength, we're going to see how that transpires going into early next week to see if the market's going to respond to strengthen the yen, specifically in the Japanese ETF EWJ, which currently is trading right around, we're seeing it right around 51 and some change. So we're going to watch, I'm going to actually take this off right now. We're seeing it trading right around, 51, getting into the high, 51.63, 51.72. So 51.63 is a level that we're going to watch. And watch this critical level here of $51. This is going to be make or break time for the Japanese ETF. A break there means you're going to see 50-50. That's midterm support. And then $49. So this is the area that we're going to watch here between 51 and 50-50. That's where if any pullback, any weakness, if they want to come and fill this gap, a challenge of this, a break, it's got to hold this 50-50 level in Japan if we're going to continue to see that the bulls are going to have some upside. Now switching gears and taking a look at the Shanghai Composite. Actually, we're going to take a look at FXI, which is the ETF. There is no way that you can actually take a look at the composite on a chart. But taking a look at China overnight, we saw that was the silver lining, so to speak, for the Asian markets overnight. Up about 0.1% over in the overnight session, and for the week, it was an impressive pop of 1.6%. China was clearly the leader. One of the biggest catalysts all week has been the People's Bank of China. They've been infusing and injecting capital into the markets. Yesterday, what was interesting, though, is that they actually infused a lower amount of capital than we've seen in the other injections this week. But there was a late day investor surge that really got the end of day market up over that positive, negative, and then flatline levels. So we'll keep an eye on that and see if that buying continues next week, both by investors as well as the People's Bank. Now, taking a look at FXI, you can clearly see that the bulls are in control. Unlike Japan, where there is some that late spurge, but it's really just been petering out, we're seeing that we had a nice just bounce up basically all of end of January, all of January and into February. It's stalling here. The next critical level that you're going to want to watch on FXI, which is the ETF that tracks Chinese large caps, there's about 40 of them in there, is 35, is 37.62. That's the level you're going to want to watch. C challenge. As a matter of fact, if you're looking to add exposure on a bullish side, that's the level that you're going to start to watch. If it's there and triggered, you're going to want to watch between 37.62 and 36.50. That's going to be the area where you're going to want to see not only support, but you're going to want to see some new buying. Anybody that has had sideline capital that wants exposure to Asia and specifically to China, that's going to be a critical area that needs to be held. Otherwise, you're going to see a challenge of $36 if that shifts. Finally, taking a look at Hong Kong. Now, Hong Kong actually struggled a little bit overnight, and we saw that it actually struggled for the week. The Hang Seng finished the overnight session down about 0.6%, and we saw weakness all week in Hong Kong. For the week, down 0.3%. Most notable reason why? Financials came under pressure. We saw it actually this week when HSBC reported earnings. Their profits were cut by 62%. We saw that pressure continue and flow over into the Asian markets. HSBC as well as Bank in China were weighing on the markets overnight. Also saw a very interesting movement, the biggest loser in Hong Kong, which was a stock that I'm pulling up right here called AAC Technology Holdings. This is one of the biggest suppliers to Apple. This stock has gone from $65 basically in December to about $86. So you're basically seeing a $20, almost a 30% pop in right around 2 months. This has been an impressive move in this supplier to Apple. It's been a darling for tech investors in the Asian region. It was down over 4.72%. Looks like some profit taking. Let's see if that flows over in other tech names here in the U.S. And again, taking a look, watching the EWH ETF that tracks Hong Kong stocks, clearly in a bullish trend like FXI, hitting some pressure here, stalling out up at this level, which is right around that 2166 level. The next level of support is going to be at 2122. That's where, if you are looking for getting exposure into Hong Kong, which is more sensitive to the financials as well as some of the technical names, not so much the infrastructures, but more the financials, housing, those kind of stocks in Hong Kong. Then you're also going to see what's going to come into play quickly is a break there is going to be the 2070 level. That's long-term support. You saw that in the midterm, the midterm traders, which is a lot of institutions, started to transition out. And that basically was starting probably right after the election. And there was also fears that the Chinese government was going to start to impose stronger lending standards. That impacted Hong Kong pretty dramatically. They bounced back with the move in the financials, and we're going to watch that very closely. So, gave you plenty to chew on over the weekend, and join us at 8:45 Eastern Time where we'll be talking about all the action in Europe. See you then here at marketStream.live.